from Jamie, and Jamie is asking, Deepak, my cousin lives in India and he wants to invest in the US stock market. What kind of taxes he needs to worry about? All right. So I'm assuming at this point that Jamie is not a US resident and he's not a US citizen and he lives in India and he wants to take advantage of US market. He wants to invest in stock market. Well, first of all, congratulations. That is wonderful. United States is open for business, and no matter where you are in the world, if you want to invest in this country is happy to help you. And if you don't know how to do that, you can certainly reach out to me and I'll be happy to walk you through that process. Now, coming back to your question, how are they taxed? So let's say if Jamie's cousin decides to buy Apple stock or Google stock, or maybe invest in ETF, maybe total market index, S&P 500, or maybe he loves our tech market and he wants to go invest in QQQ, or I can go on. There's so many wonderful funds in this country, and people have been making money. And I think a lot of people are super excited because our stock markets did so well. 2023, I think most people made almost 30% return, even if you were not into individual stocks, even if you were in ETFs. In 2024, we did that again, another 30%. So people are super excited. And then on top of that, appreciation of dollar, right? I think if I remember correctly, in 2024, dollar appreciated by 7%, while many other currencies depreciated. So Jamie's talking about India in this case. You might want to check out what was the depreciation of rupee last year in 2024. My guess, probably 2%, 3%, maybe more. So if you would have invested in rupee, you would have lost 3% in depreciation, versus if you had invested in dollars, that would have appreciated by 7%. I mean, look at that. Just the currency difference is so huge, right? So that's number one. Number two, markets are awesome. Okay, markets are awesome. They're robust. United States has some of the best companies in the world, and they're hardworking people running these companies. And I think there's a strong future. So, look, Jamie's cousin, I think you're making the right move by bringing your investments to this wonderful country. So that's I'm with you. I feel you, bro. All right. Now, as far as tax treatment, let me tell you this, man. You are going to love this. When foreigners invest in the United States, this country do not charge you capital gain tax. That's right. You can buy Apple stock, you can buy Google stock, you can buy Amazon stock. There is no capital gain tax. If you're a foreigner, if you are not a US resident, you're not a US citizen, you're not linked to the United States anyway, you're living in a different country, all you're doing is investing in stock market in the United States, there are no capital gain tax. Now, let me caution you. When I say they're not capital gain tax, that doesn't mean that there are no taxes. There are still a couple other things you need to deal with. For example, you do need to deal with the state tax. So depending upon where you set up your brokerage account, and you're going to give them some sort of address, because you need to have an address, and which state that is in. So you have to really be very careful as to which state you pick for your investments. Extremely important. So a lot of time what happens is, somebody living in a different country, maybe they have a friend, family member living in a particular state, and they just randomly choose that state. I don't understand why. If that state is charging you tax, why are you going that way? Why not pick a state like Texas, for example, when there are no state taxes? I mean, you're not living in that state anyway, so why are you sticking with that? That's, anyhow, getting a little off the topic. I don't want to advise you on how to set up your brokerage. That's a topic for another day. But you get my point. There are state taxes, so please be very careful with that. Another thing I want to point out is dividends. So a lot of these companies in the US pay good dividends, especially if you're investing in cyclical stocks. They're oftentimes very good. And even the IT sector these days are starting to pay out good dividends. I wouldn't be surprised if you're making 3-4% a year just in dividend. So think about it. If you are living in a different country and your currency is being depreciated by 2-3%, and instead of using that currency, you start investing in US dollar, all of a sudden you're not subject to that depreciation. On top of that, you're getting appreciation of US dollar. And then on top of that, you're getting dividend. Then US also has buybacks. A lot of companies in the United States, they buy back their own stock. So you're getting that yield. And obviously, then the company itself is growing. So when they're growing, the stock price grows. So you're just imagine how many opportunities are right there. All right. So let me just rephrase what I just talked about. Number one, if you are not linked to the United States, then there's no capital gain tax. Number two, you do have to deal with state taxes, so it's very important how you set up your brokerage account. Okay. Number three, there are taxes on dividends. So those are the things that you need to remember as far as your question is concerned. Now, a couple of things to watch out for. Number one, if if you're doing some sort of trade or business in the United States, then all of a sudden you do make yourself subject to regular income taxes. So, for example, let's say you set up an LLC in this country and you start trading under that LLC. Well, if you're trading, that is a business. And if it is a business, then all of a sudden you're subject to income taxes. So you got to be very careful how you set that up. That's number one. Number two, sometimes people think that they could get away from taxes by giving somebody else an authority to run the business on their behalf. So, for example, although I'm not an investment advisor whatsoever, but just assume for a second I was, maybe I was doing that kind of business, and maybe you're one of my clients in some country in this world, and you said, Deepak, can you do me a favor? Can you trade on my behalf? So, again, your LLC, you're doing it, but you live in a whole different country, and I start trading on your behalf. Guess what? If I start trading on your behalf, you're still in business in the United States. That will be still seen as a business, and then you will be still subject to income taxes. So you have to be very, very careful with that as well. Okay. Another thing is, oftentimes people confuse capital gains of different types. For example, right now I'm strictly talking about the stock market because that's what Jamie's question was. But what about real estate? For example, if you are a foreign resident and you purchase a property here, maybe a few years ago, and now property has appreciated, let's just say, I don't know, $1 million or $2 million, whatever the amount might be. And you watch this podcast right now and you go like, well, I can sell it and not pay any taxes. I'm like, no, that's not what I said. I was specifically talking about the stock market. Real estate works a little bit differently. That's a whole different act. So even though if you're a known resident, then real estate transactions get a little bit tricky. Why? And I'll explain to you how they get. Okay, let's talk about how they get tricky. In real estate transaction, if I was a buyer, if I was buying your property, what I would have to do is withhold certain percentage of the sale price. And if I'm not wrong, I think that percentage is 15%. Okay, so let's say if it's $1 million property, I need to withhold $150,000. You're not going to get the $1 million. I have to take $150,000 and deposit it with IRS. Now, if you are a buyer and maybe you're buying a property from somebody who's living in China or India or Japan or whatever, always remember, this is your responsibility to not pay the seller full amount. So you got to know whether that seller is a US resident or a foreign resident. Extremely important, because those penalties can come back and bite you even as a buyer. So there's a requirement for buyer and the seller. All right. Now, as a seller, you 15% of that is withheld. Remember, it's of a sale price, not of a gain, not on your profit, not on your net income or anything like that. It's on the sale price, and that's not your final tax. Then you still, now that you have done that real estate transaction, you still got to file a U.S. tax return. And once you file the U.S. tax return, that is when your final tax liability will be calculated, and that $150,000 payment you have already made, that will be credited against it, and that's how you're going to settle your U.S. tax return. So that's another important point I want you to keep in mind. Third thing I can think of in this subject matter would be REITs, right? So a lot of time people don't want to own the properties. Maybe they invest in REITs. So similarly, REITs work a little bit differently. So I think, if I'm not wrong, if you're a foreign resident, you can still buy REIT. That's not a problem. Personally speaking, I don't buy REIT. So, I think I find better opportunities elsewhere. Plus, I'm kind of like a little bit of a control freak. I like to have control over my investment. REITs, you're kind of giving away control to somebody else. That's why I don't like them. Doesn't mean they're bad. I have many clients who are making really good money with it. So I don't have any ill feeling against them. That's just me. But if you invest in a REIT and you're a known resident, you're living in a different country, then most REITs are going to withhold 30% of whatever income you have from them. So be careful with that. So let's say we talk about REITs, we talked about your stock market, we talk about real estate. I think that gives you a comprehensive view about this topic whatsoever. But again, my recommendation is if you are living in a different country and you want to invest, why not set up a consultation appointment? Let's get to know you. Honestly speaking, I like consultants so I understand my clients, so I can serve them over the years. If I don't even know what your thought process is, for example, I want to know why are you investing in crypto. I want to know why are you going into real estate. I want to know why are you invested in the stock market. What are your thought process? The better I understand it, I understand your long-term goals, the better strategies I can offer you. Hey, let's structure it this way next year. Let's structure it this way. I want to be engaged with you. I want to be a guy that you can count on. I'm easy to get hold of. We connect via WhatsApp, and I'm here to help you. All right. So I hope that answers the question. Please forward this video to your cousin. I think that will be the first step. And then if he wants to work with me, just go to taxcodeadvisors.com and he can set up a consultation appointment there. And then I'll take it from there. All right. I hope that answers it. Thank you.